Hey everyone, good morning. It's JJ from Micro Each Futures. Hope everyone's going to have a great weekend. Going to get the weekend update out early. Um, it's early in the morning here in the UK, so you'll see this when you wake up. I'll repost it on Sunday night as well. So we had a little bit of drama at the end of the day yesterday, and tariffs, yada, yada, yada. And, the month end is all about markup anyway. So they got to mark up their portfolios. They got to, and I mean, anyone who's a size trader who had position, they got to blow it off a little higher, right? That's why you take a market higher is to sell. And they blew it off. You notice we did not take out the previous day's low. There is a poor low here. So there was competitive buying, but that's at the end of the day. And so if this thing gaps down on the open, right? Because everyone's really anxious and nervous, and anxious money and nervous money don't really stick around in speculative markets. So if we do get a gap down, look for these areas, and I'll just go show them to you. Well, the first one is around there at 57, 60, 56, and then I'd say 60, 41, 60, 23 and a quarter, and 59.96. These are the swing lows. Now, here's the thing. In market profile, we learned that there's something called a look above and fail. So this is the zone that we currently are in. Okay. And that's 59.76 to 6100. The middle is 60.38 half. We looked above and failed. Okay. Which means the target for larger traders is 59.76. Okay. Earlier, what we did was we did a look below. Remember that Sunday night came down, in the 5900s here and then bounced. So that was a look below and fail. And of course, it targeted 6100. Now we looked above and failed. So as it failed and it takes out these levels like 65 and three quarters, right? As it takes out 38, just use the lower levels because if it gaps down, and sometimes when a market gaps down, there'll be a bunch of short covering here, and at nighttime, it'll go sideways and then do this. Be careful of that. Just use the levels. You make sure you're using stops. If the market does gap down on the open Sunday night, let it gap. Let the large traders come in and build a low. How you'll see that is the factor of time, right? And then always remember that if you are, dip buying at night, you've got all this inventory above you that's falling out, and there's not that much buying, so you should sell into strength. Don't try and be building positions on a Sunday night, unless, of course, you have the capital and the knowledge and the skill to do so. So that's kind of what we're looking at here. If we get back over 60, 65, your target will be that 6100, but let's see what happens, right? I'm short biased, but when you're biased, if the market tells you that your bias is wrong, remember you have to trade against your bias. And the way to do that is to follow a trade setup that allows you to trade against your bias when your bias is wrong. Very difficult to do, but we have one here at Micro Futures. Come see us for that. Okay, enough advertising. Look below, look above and fail of 6,100. So we hit the first target here, closed just underneath it, right? Next target is 38, next target is 7, next target is 59.76. So these are your swing lows. That's what you want to look out for. Let's go take a look at Sunday's open. We closed at 65 half. That's 65 and three quarters is a big level for me. The point of control shifted lower, right? So all of that distributed volume up here fell out and it was caught by short covering hands on month end. How convenient, right? So everybody's, the longs made money, the shorts made money, and if you didn't trade with the market, you probably got kicked. So watch these lows on the open. There's that 56, there's 42, right? There's going to be some stops here at 38 half, right? So there is A little bit of structure on the way down, not very much. So if you get any big selling or if they put out another one of those fakakta news releases about AI or something like that to shake everybody loose, remember it's a fresh month and there's no reason to mark the market up at the beginning of the month. So everybody wants to get a nice cheap cost basis. If it starts falling, just get out of the way and let it fall if you're not already short, right? So watch those levels. Now, for the very unpopular upper case, right? Upper side, right? That's 60, 68. Say we open in yesterday's range. Say we don't gap down, right? Say we open inside Friday's range and we start taking out the upper stops, right? Just use those as your targets, okay? So if we open, say at, say we open near the close or say we open at 67, if it gets above 69, you'll be looking at 80 and a half, then 84, right? These are all your upper stops. There's a chunk of volume, sorry, in the single prints, that's supply, right? So those are the things that you want to worry about or be aware of, to the if usually what happens when a market sells off is the wholesalers grab the inventory and try and sell it at night higher, right? But everyone's really, really worried and blah, 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 blah. Let's see if that translates into order flow, okay? Because whatever you hear on Twitter, right, it's got to do this, it's got to do that. Does that actually translate into actual actionable order flow? Or are these people just talking out there, hoo-ha, right? So here's the thing. Let the market tell you. I don't know, right? You know, uh, and if I did, I'd be on a private island somewhere. I wouldn't be talking to you guys. Just kidding. Just kidding. So let the market tell us. Don't try and predict, right? If it opens outside on a gap, then you know there's selling pressure. If it opens inside, maybe not so bad. Be careful. Let the market open a little bit. Let the size traders, right? Let them build your support and resistance. That's why these always saying, be patient, be patient. People hate being told to be patient. But there's a reason. You're being patient while you wait for the larger size traders to establish that resistance and the support. They do so by offering supply and then shutting off supply. Support is where supply is shut off. Resistance is where supply is introduced and there's competitive selling. Let the larger traders bring in, let the order flow come in, let the larger traders build that out for you and then execute. Globex is a long session. You don't have to trade the open. Okay. So just relax, take it easy, right? Sunday night, have a glass of wine, relax, watch the open, be smart. It's a brand new month, right? And just watch that. Now, good old Nvidia, I'm going to include this. I don't usually do equities. Just wanted to show you the volume profile from the move down. So what's going on now is the stock needs some cleaning out, okay? We have sort of a rotation going here between 119 and about 127, okay? So what happens on that rotation is the market is liquidating. Not everybody sells at once, right? So what larger traders do is they work both sides of that box, right? They're a seller above 123, they're a buyer underneath, right? So you trade the look below and fail of the bottom, the look above and fail, right? And how you trade that is when the market comes back into the box, you go long, you put your stop under that level, and then you sell into the strength. When it looks above and fails, you go short, you put your stop above that level. That's how you manage risk, and your target will be the bottom of the box. That is the concept of rotation. Rotation is how a cost basis is built. A cost basis is how a market cleans itself out after a liquidation, and then we go and do this. But it does take time. This is a 4-hour candle wax chart, okay? So that's basically what's going on in Nvidia. Have a wonderful, wonderful weekend. And once again, if you want to learn how to trade with common sense, risk management, if you want to learn how to do this for and actually make a living instead of following every indicator and trend in software. Common sense, good old fashioned, this is how a market works. This is where the sell orders end. This is where you go long. This is how you manage your risk. Learn how to not trade bad markets. Come visit us at microefutures.com. Stop wasting money. We also have one-on-one mentoring, and that's a lifetime one-on-one mentoring. So I take you on, and you've got me for as long as you need. And it's just a one-time fee. We don't charge people. We don't add things, right? I take you on, and I stay with you until you're profitable. And that's pretty much it. Have a wonderful weekend. Trade safe and enjoy the new month. And let's all have a great February. Bye for now.